So on 25th August, I had shot this particular video where I discussed 7-8 key stocks that I am aggregating on my portfolio. And I felt that these stocks are going to do okay or do well before the festive season starts or during the festive season. Luckily, these picks have done fairly okay. They have actually beaten the market. And I have also spoken about some American stocks like Amazon, which had given a very good run up in the last 6 months. Roughly 35-40% run up has happened on Amazon. So these picks have been going well. Now, typically what happens is that, people just make video and then they do not give any updates on it. That is not my vision. That is not how I operate. I would discuss whichever of these stocks have fallen, why they have fallen, what am I going to do about it, which of these stocks are doing well, what do I see as the future of these stocks. I will give an updated commentary. Part 2, more importantly, I will discuss 3 of my best picks at this juncture. Why am I picking that? I will explain the entire logic, rationale behind it. In case you're a serious investor, learn the concept of diversification. Invest not only in India, but also outside India. For that, I will definitely recommend that you learn more about tech investing in the US. For example, take a look at Apple stock and what you will see is that last 1 year mein. In fact, if you check roughly 2 years, nothing has happened on Apple stock. This is a good stock that is consolidating. It might happen that it might consolidate for 6 more months. But these type of stocks are going to give very good run up. They are stable or more stable than, in my opinion, even FDs. So from that perspective, these are good picks. In case you're looking to buy these type of stocks and explore international diversification options, definitely go check out Vested. I'm putting the links in the description and comment box. It's an excellent product in case you're looking to do stock investing in the US. I personally hedge my portfolio by picking some US stocks. And in case you're of the opinion कि सारा exposure India में नहीं रखना है, you have to diversify outside India, then US stock investing become very transparent and a good option to explore. So with that said, let us move over to the main video and let me start discussing all the stocks that I had given commentary on back on my 25th August video, and I will share some important and key updates. So let me very quickly touch upon 2 of my, I won't call it losers, but also not winners. So these are Asian Paints and Indigo Paints. Now let me pick the case study of Indigo Paints. When I made the video, in fact, I had aggregated it before that, so मेरे को थोड़े से कम price में मिला था. At that point in time, Indigo Paints was trading at 15 rupees, 1515. Now it is trading at 1473 rupees. So it's not as if यार कोई बहुत खास movement हुआ है in the last 3 odd months. Now please notice very quickly that over the last 3 odd months, there has been issues with paint stocks in the sense that oil or crude prices have gone up, and that was one of the key reasons why the Asian Paint stocks, Indigo Paint stock fell quite aggressively. In fact, as of today, when I'm making this video, you can see Indigo Paints has gone up by 3.5% just today itself. Now why people try to look for answers like this कि यार आज क्यों बढ़ गया Indigo Paints? Well, honestly, no one knows why Indigo Paints has grown today. But generally, you have to keep like a 6-month, 12-month viewpoint on any stock that you're purchasing. The investment thesis behind Indigo Paints is very, very simple. The investment thesis is that, see, this is a small cap company, only 7,000 crores. Is there any issue with the revenues, profits of this company? Not at all. The revenues are fine. They're somewhat stagnated. वो तो अभी होगा, because unless the real estate market truly picks up, and real estate market has to pick up for Indigo Paints and all those companies to go up. Unless the real estate market picks up, these stocks are not going to perform exceedingly well. But see, to cut the long story short, 2020, 2021, 2022, 2023 also, there have been host of problems with real estate. 2020 में तो crash ही कर गया था. Then 2021 to inflation problem. Then interest rate is very high, so borrowing कहाँ से होगी? So bunch of problems are going on. Crude prices, so everything has come after all these paint stocks, but it's not as if that बहुत ज़्यादा दिक्कतें आ गई. For example, if you take a look at quarterly numbers, for example, September quarter, if you compare, then the revenues have grown. If you compare December quarter, 2022 का December quarter का आपको 2021 करना पड़ेगा, तो then also there has been improvement. June quarter, if you take a look, then again there has been improvement. So it's not as if that there has been any massive problem. You will say that OPM or operating profit margin has come down. Yes, that is correct, that operating profit margins have come down. But there is a very clear reason why, which is again the increase in oil prices or crude prices. So since the entire point as to why the OPM on paint stocks have come down is very clear to us, on top of that, related point here is the valuation at which you are getting these stocks. For example, here you can clearly see that 1000 के आसपास the bottoming out of the stock had happened. There has been a fairly fast recovery of this stock. Now it is trading at its 200-day moving average. So according to me, this stock is at a good support level. I don't see it falling crazily from this point. The same commentary applies to something like Asian Paints. So let me quickly discuss the numbers there also. Here, the trend is very clear. In fact, Asian Paints is sitting on its highest ever profits, highest ever revenues. Growth rate may not any massive major slowdown. In fact, in the last 12 months, growth has picked up. The profit growth has picked up. Why? Because unlike Indigo Paints, Asian Paints has something called as pricing power. So they are able to protect their OPM, which Indigo Paints is unable to do as of now. But I think that whenever the crude price problem gets solved fully, then this Indigo Paint and Asian Paints are likely to do fairly well. Bottoming out ho chuki hai, काफी time ho chuka hai according to me. Now of course I can be wrong, but this is a bet that I continue to hold. I would not consider this bet as a bad bet that I had made roughly 3 odd months ago. Okay, so the next stock that I had discussed was Jyoti Resins, and back then when I made the video, it was trading at 1452. Now it is roughly at 1600. So इसमें growth आ चुकी है. ऐसी बहुत ज़्यादा growth नहीं, because we are just looking at 2.5-3 months. So बहुत ज़्यादा नहीं आएगी, but still fairly good growth on this stock. So let me first and foremost speak about the PE ratio of the company, because this is fairly important. Why? Because it used to trade at fairly expensive PE of roughly 75, 76. Right now the PE seems sensible. But please note that again, very similar to Indigo Paints, Jyoti Resin is in fact a micro cap company, so to say. Iska valuation is very, very less. Okay. Now, for people who do not know what Jyoti Resins does, basically it is a competitor to Pidilite. So Pidilite makes Fevicol, and Jyoti Resins also has an adhesive component and adhesive play. वहाँ से उनका major revenue आता है. So it is a low cost competitor to Pidilite, because अब Pidilite, Fevicol का नाम बहुत ज़्यादा हो चुका है. So they charge a lot of money. Now people don't really bother, right? कि आपने यार लकड़ी पे क्या चीज़ चिपकाई है, how you have stuck like a plywood on particular table. Do you really bother ki which lamination has been used on it? The short answer is no. So therefore, carpenters, badai, what they do is that जहाँ से उनको commission ज़्यादा मिल रहा है, wherever they are making more commission, they pick that product, right? So, and Jyoti Resins has actually done very well from a business point of view in terms of exploring this channel. If you speak with people from the construction industry, this is a viewpoint that you will clearly pick. Now this translates into number also. So again, you can see that the revenues have been fairly good, profits have been very good, growth rate has been very good. The only issue was valuation in this company. In fact, I had picked this company long time back. I had continued to hold it, so मेरा पैसा तो काफी बन गया इस कंपनी में. But I don't know if you should be purchasing these type of stocks in bulk. If you are doing this in SIP mode, it makes sense, because the business is a defense-oriented business. Defense-oriented means that it is a type of a business where the demand will be fairly stable. It's not as if the demand एकदम से गिर जाएगी and all that stuff. In fact, demand is going to pick up. Both the categories, be it paints category, be it Pidilite / Jyoti Resins type of stock, they will all come back up when the real estate sector starts booming. This is the big play according to my understanding, because when it comes to capital intensive sectors, there are two asset-based sectors, so to say. Now, what are asset-based sectors? Asset-based sector means that, for example, if there is a infrastructure company and a bridge bana rakhe, building bana rakhi and all that stuff, and they go bankrupt, then what is going to happen? There is some asset, right? For example, a building as an asset that can be auctioned off. Some part of the money can be recovered. So these are asset-based industries. Now, there are primarily two asset-backed industries in India where there is a lot of capital expenditure. One is infrastructure. Now here, it is either the government that ends up spending a lot of public money in terms of creating infrastructure, or they are like government friendly private companies. I'll not name them. So these are government friends, right? So they are the ones making a lot of money. But unfortunately in this, the wealth is not passed on to investors. This is a very important point for you to understand कि इन कंपनियों का पैसा बनता होगा, right? For example, IRCTC, it's a government company. Now, is it government's responsibility to pay back the shareholders? The short answer is no, right? बिल्कुल भी नहीं, right? Their job, for example, if IRCTC is sitting on 1000 crore profits, what is government going to do? They are going to say, yaar, you know what? We have to do social welfare programs, this, that. So they might expatriate these funds to Ministry of Railways, or they might launch some free programs ki bhai jal free kar diya, right? And bunch of like distillery water free and all this stuff free. And they are not really focused on like wealth generation per se. And therefore, even when companies have massive monopoly in India, they sometimes might not do well. Okay, and यहाँ पे तो crony capitalism का game चलता है, so therefore investing here does not make much sense. But see, when it comes to real estate, if you pick a bad cycle was 2020, and real estate cycles are multi-year cycles. That जब गिरना शुरू करता है real estate, so it falls for like 10 years, and जब उठना शुरू करता है it rises for 10 years. So real estate cycle is very very long. There is a reason behind it. Why? Because पहले land procurement होगा, then you know what, the builder is going to get funds, then build it, then selling will happen. So all this takes time, right? So sitting in 2023, we are somewhere like according to my estimates, we are somewhere around like 30% positive real estate cycle. Abhi to 70% honi baki hai. 70% is supposed to happen. And therefore, one of the stocks that I had spoken about earlier, Godrej Properties, has done fairly well in the last 3 months. Go and check the results. It has done fabulously well, and real estate companies are doing really well. The real estate that I had physically purchased has gone up by roughly 20% just from like last year, which has been fairly good. So we are definitely in a positive real estate cycle. If you are buying good real estate / if you are buying good real estate stocks / you are buying companies which have to do with real estate, for example, paints company or Jyoti Resins, Pidilite, they are likely to do well, and therefore I continue to support these companies. So okay, if you are enjoying this commentary so far, then I would quickly talk about my YouTube member community. It is an excellent community for very interested, serious investors. If you're someone who is investing more than 2.5 lakhs a year in the stock market, then you are definitely a serious investor. Learn more about stock investing seriously, fundamentally. The objective of my member community is very simple, that to create a bunch of people who are very serious about learning. They can learn from each other. They can learn from my regular commentary on whatever is happening. Very quick commentary on things. For example, many a times I'm not able to make or release video very quickly. अब मार्केट में कुछ पैनिक मचा हुआ है, so I can write a very easy going post. So आपको confidence आ जाएगी, अच्छा यार, what should I stay, should I not stay वगैरह वगैरह, and then you can make a more thought out decision. Best part is that this member community is subscription based, so the amount that charged is very very less. It's honestly a filter, so only serious participants join that community and enrich each other's learning experience. So in case you are interested in learning more, just press the join button and you will be able to join it. So with that said, let me move on to the next set of stocks, which is around banking. Now, interesting thing is that when it comes to public sector banks, for example, check like Punjab National Bank, it has given 150% return, right? Massive run up on public sector banks. I was speaking about it last year. Now I feel that the rally is kind of maturing. When it comes to small finance bank, a lot of banks, be it Ujjivan Small Finance Bank, be it Equitas, all have done fairly well. Again, 100% run up. IDFC First Bank, all have been doing exceptionally well. So यहाँ पे rally हो चुकी है, यहाँ पे rally हो चुकी है, but private sector bank, no. Okay. So when it comes to Kotak, when it comes to HDFC Bank, merger issue is there in HDFC. Okay, fine, merger issue is there. Then what is exactly the issue with Kotak, or what is exactly the issue with ICICI, or what is exactly the issue with Axis Bank? People do stop thinking beyond that, right? कि नहीं यार, HDFC में ना, there is like merger issue that is going on. Fine, there is merger issue in HDFC, no. But then why is it that Kotak Bank is also not moving? The point I'm trying to drive home here is that, see, when operators try to run certain segment of the banking stocks, they will run segment 1 first, right? Then they might run this segment. Then finally, जब clear हो जाएगा कि थक गए लोग, right? I mean, people have just no patience left. वो HDFC Bank बेच बाज के इस पे मीम बना के निकल जाएंगे. Then finally, HDFC Bank will start running like this. Now, can I write it on a stamp paper and give you when HDFC Bank is going to move? I can't. But can I say that it is undervalued as of now? 100% yes. It is definitely undervalued. It's not just me saying it. The numbers say it. Please go check the numbers again and let me just quickly share that with you. So here is it. Highest ever profits, highest ever revenues at a scale where HDFC Bank is. It is growing at a CAGR of 20%. Look at that. It is like absolutely mind-numbing that such a big company growing at 20% CAGR. According to me, it is safer than an FD again, right? These are like big mega companies that have massive competitive advantage. It's not as if that I can start an HDFC Bank type of a franchise, all that stuff. Sabki sab piti pitai hai in HDFC Bank, except for HDFC AMC and AMCs in general. Other HDFC group stocks haven't done well, and I am bullish on each of these. I feel that they are going to give a run up. Definitely वो थका सकते हैं that 1 year nothing happens in this. थक गए लोग, and after that it will start to run, but it will definitely run. There is no reason why it will not compound at 15 to 20% CAGR if you take a 4-5 year viewpoint from this point. Now, of course, I can be wrong that if some new information comes out, but just looking at the results, that is very well expected. And anyone who understands the concept of analyzing intrinsic value, they will be able to see this. So I hope that this point is clear. Now, very quick note on Bandhan Bank. A lot of people have asked me that, what is happening with Bandhan Bank? Why is it that the stock is falling? See, from a results point of view, there has been nothing off per se. There is nothing negative per se, but there is a major problem that is happening with Bandhan Bank, right? And you can clearly see that the stock is somewhat in a downturn. Downturn means that this is a downward sloping curve. So there is positive news and negative news on Bandhan Bank. Positive news is that, see, massive aggregation has been happening on Bandhan Bank. Usually when you see these type of aggregation, it means that the stock is likely to be taken up at any point. So this is a positive news. The negative news has to do with interest rate. Now, the problem is that in the US, the interest rates are already high, around 6.5%. It was expected that these interest rates will be cut, right? They will be brought down to 3.5%, all that stuff. We are very much on track of this happening, but the problem is that this is happening slowly. Now, अब आप बोलोगे कि slowly हो रहा है तो क्या हो गया? Well, see, the problem is that when it comes to microfinance institution loans, these loans are given to the end users at like 20%, 25% also, which are very high rate of interest. ठीक है, unless this rate comes down, they cannot rationalize these interest rates. And if people have to pay such high interest rate for a prolonged period of time, then refinancing their loans becomes a problem. And that is one of the reasons why I cut my entire position on Ujjivan Small Finance Bank. Now, this is the same issue that Bandhan Bank is also likely to face. Should you hold, should you not hold? It's your call. I'm not saying anything on that. That is just my viewpoint that I'm sharing with you, this information. There are pros and cons to holding it. It's not a very clear-cut data, whether you should be selling it, not selling it. But yes, if the first sign of fissure come into the market, banks like Ujjivan Small Finance and Bandhan Bank are going to correct quite a lot. Okay, so the last stock that I'd spoken about was Vedant Fashions, and on 25th August, it was trading at 2030. So thoda bahut gain hua hai, good news. Now the way Vedant Fashion is building its brand, it is doing a fabulous job there. Chahe wo Mohe ho gaya, Manyavar ho gaya, all these are good brands, they are coming up. For example, when you're looking at market cap and you study the balance sheet, what you will see is that there are assets on the balance sheet. These are fixed assets. And here you will see intangible assets. Okay. So intangible means that which you can't touch. For example, brand value. Now, for example, in Horlicks case, I'll have to just double check, but Horlicks case, I think the brand value was 10,000 crore or something, which is massive. The point I'm trying to tell you is that a company that is doing brand building, like Mohe, Manyavar, creating sub brands, people are recognizing those brands. They end up doing fairly well. This is a bet that I'm taking. I continue to hold it. But again, you have to give it time in order for that brand to get strengthened. Vedant Fashion in a highly competitive landscape has been able to build its name. No doubt about that, but this is a long-term play. This, out of all the stocks that I've spoken, probably Vedant Fashion is likely to take the longest in order to become something of a multi-bagger, because majority of its value unlocking will happen due to brand creation. Now that takes time, or that takes like funky stuff, right? These are two things. I'll not go into funky stuff. What is the meaning of that? You guys can let me know. But basically, Vedant Fashion is doing really well in terms of brand building that will get featured into its IP, intellectual property. And there is a very clear-cut path as to why Vedant Fashion is likely to do well. Now, let's see how it progresses. But of course, when it comes to businesses like this, there is no clear-cut answer ki yaar definitely chalega ya nahi chalega. But so far, the needle is positive on the green side for me, so I'm holding it. So, okay, so now comes the final 3 picks for me, which I'm adding to this list. And I will write a more detailed commentary tomorrow as to why these 3 stocks are likely to do fabulously well from this point, according to me. I will revisit these in the next 6 months to 12 months. I'm hoping that in the next 6 to 12 months, these 3 stocks that I'm going to speak about are going to do fairly well. One is SBI Cards. I'm very, very bullish on this stock. Number 2 is Aavas Financiers. Again, all the other stocks in a similar category have already given a run up. Aavas Financiers has unfortunately crashed despite doing well. Why is that? No one knows. No clear reason. It looks like that the downward trend on Aavas Financiers hopefully will get over now and it will start moving up. So I'm betting on this. Third and finally are HDFC group stocks. Except for HDFC AMC, I continue to hold my AMC positions, but because AMCs have given quite a bit of run up, it's not a valuation play anymore as per my understanding, but other HDFC group stocks will do well. These are 3 picks that I'm adding. So let me revisit this video in the next 3 months and I will share some important updates. But do let me know whether you like this format or not. And as a next step, do watch this video as to how you can create your own portfolio the way Mr. Warren Buffett is doing by using something called as barbell strategy. So go check out this video and I'll see you soon.